It is mad hot. Like you can see the sweat dripping on my face, but I am just getting back from the gym and I don't even want to go back indoors because it is that hot. Just need to get something cold to drink before I can just sit back on the chart. I'm going to take you guys on a ride with me. Let us go. I've been off the charts for a minute this week because of the obvious retracements that we've been seeing happening on Nasdaq, right? And you know, it's actually good to stay off the charts when you are not sure, right? When you're not sure of what's happening in the market, it's actually good to just stay off. So you already know that I have been bullish, right? I've been bullish for the longest time on Nasdaq, right? But because of the current retracement that we have been seeing happening, right, I just had to take a step back so that I can actually understand what is happening in the market before I just, risk my capital or jump into the trades without actually, understanding what is happening, right? And we are currently in a Nasdaq trade with the whole team, with the whole inner circle, and we've just obviously hit our first and second take profits, right? 100 pips, nothing too crazy. It is a beautiful Friday, as you already know that we are about to close off the week with a bang, even though we had like a few trades this week, but it actually has been a profitable week. We haven't taken a single L. We've just been taking first and second take profits, which is like 40 pips and 100 pips. And we've had, I think, an overall of 5 trades or 4 trades. I'm not so sure, right? But it is mad hot right now. I don't know if you can see my face. It is sweating, right? So I just want to get myself something to drink before I actually just, make a lit video for you guys, right? The temperatures this side, they get to the extremes. If it's cold, it's going to be minus 100. If it's hot, it's going to be plus 100. And I really don't like that about, this country. But how you guys doing? I am doing absolutely lovely. I am super happy with my performance for this current week. Like I said, in as much as the market has been acting up, we've actually just managed to, capitalize on that, right? And I was looking at the gold trade that I actually gave in the free signal group a while ago. I think it's over like 20 days ago. And I did actually indicate that this trade is a swing trade, right? So you just have to actually understand the different types of traders they are, right? And understand yourself as a trader. So we do have swing traders. Those are the traders that will hold trades for the longest time. That's what I just actually want to show you on this particular gold trade that I gave. So if you were not a swing trader, you were actually not supposed to get into that trade because it's been running for 20 days. And personally, I am not a swing trader. That is why I was not in the trade, but then instead I was looking for entry points, just to go in and out. Is this not too bright? Like, I would understand. All right, so I just want to get a drink over on right here, right? I'm gonna park here. I think there's a place to park right over there. I don't know if I can fit though.
Tell me what you say now. Tell me what you say. You said that you would come again. You said that we would remain friends, but
all right over here. I think we are good right over here.
So why would you show up?
All right. So we are here and let's go inside so that we can actually just, talk. As we wait for it, let us just dive into talking about day trading for beginners. So as you already know, I am personally a day trader. It means that I like to trade each and every single day. I'm almost likely to find a setup each and every single day and go in and out of the market within the same day, right? So as a trader, you should understand what kind of trader you are, right? So let's start with the obvious. What is day trade? So like I said, it is buying whatever instrument you are buying on the very same day, entering the position on the same day and exiting it within a few hours, just like what we do, right? So this is mainly capitalizing on short-term price movements, right? That is why you hear me saying that we want to trade the New York session when we have volatility, right? And the New York session lasts for a few hours, right? We're going to have the NYSE opening at 4:30 and then closing at 11 o'clock. So within this time frame, I should get into the trade and out of the trade, right? Like today, you can see that we've entered a Nasdaq trade and we have already taken 40 pips, we have taken 100 pips, and we're already almost out of the trade because we're just having our stop loss within our entry, and then we're waiting for the market to probably, keep shooting up and go and hit our third take profit, or if it retraces, hits our stop loss and takes us out in profit. So there are two main strategies that actually work for day trading. The first one being the trend following strategy. This, in simple terms, is just identifying the overall trend of the market, uptrend or downtrend, and then capitalizing on that particular movement. And you always want to look for positions in the direction of the trend. And the second strategy for a day trader is support and resistance. These are really crucial. And then the favorite thing that I want to do when we are trading support and resistance is to buy the breakouts of the highs, right? So if we have a high, we always want to buy the breakout, and if we have a low, we always want to sell the lows, right? Day trading, unlike swing trading, right, is actually simpler in my own opinion because I get to go in and out of the market. I don't have to stress over my trades, going back in retracement. As you already know, that the market never moves like tap water, right? So when you're a swing trader, it means that you're holding trades for a long time, over a period of time. Hold them for days, weeks, or even months in just one single trade, and you know that it's just not going to shoot up or shoot down. It's actually just going to play up and down with you. As the name sounds, the swing trading, it goes swing up, swing down, swing up, swing down, and it forms an overall trend, right, as it swing trades. As a swing trader, you always want to look for setups on the higher time frames, right? But then as a day trader, right, I like to use higher time frames for chart bias for the overall trend to see what the market is doing. But I go and enter my positions on a lower time frame, which is the 15-minute and the 5-minute, right? So back to serious business. You can see I have this is called Mango Maracun, and tastes really good. Like, that spot is really good, and we have to give it up for the bears for this week, right, on Nasdaq. You know that the buyers have been dominating the Nasdaq market for this whole time. Even on the daily time frame, it's just been insane. Like, week after week, we've just been talking about we are breaking the highs on Nasdaq, and this week the bears have stepped in with so much momentum. It was absolutely impressive. Let me pull out my screen right over here. You can see that we've had a really, impressive sell off in just a single day. We've never had the sellers stepping in with so much momentum in, especially this big candle right over here that we had on Wednesday. Absolutely insane. I actually thought that the market would come and sit round about this zone because, it had broken out of the highs, right? You see, this was the high. It broke out of it, and I thought that it would retrace, right? And you can see that it actually did not come and sit at the zone for a retracement. And obviously, that we're looking at the second zone. And in the previous support and resistance video, you already know that before you actually talk about a change in the direction of the trend, the market has to get rejected twice, right? It has to be rejected at the first zone, and it has to be rejected at the second zone, right? That is why I was not looking for selling positions on Nasdaq, because it had not yet broken the second or the previous resistance zone that it had, right? It has to break twice because the ruling trend is an uptrend. You always have to respect that no matter what you are seeing. So in as much as you would have taken good sells here, the market could have just reversed and gone back in the direction of the trend. Now, whenever I give a weekly analysis, I am always going to give you two possibilities of what is probably going to happen in the market, because whenever you enter any trade, there are going to be two possible outcomes. It's either going to be a winning trade or it's going to be a losing trade. That is not negotiable, right? So right over here, we said that here. So technically, we want the market to retest at the zone. So we're saying that if it rejects right over here, right, we're going to capitalize and going for our buying positions, which was our trade on Monday. As you can see right over here, right, this was our Monday trade. It did reject at the zone that I told you. So after you watch the weekly analysis, you are supposed to look for a rejection at this zone, right? You can see that we have really good price action at these zones with these rejection candlesticks right over here, and then you could have actually just entered this buying trade with us and capitalized to the next zone that was actually indicated at that particular zone, right? If it plays around in this zone, obviously we also wanted to reject here, but then there's a high chance that if it now plays around in this zone, it will break out. And you heard right, if it plays around in this zone, which is this zone, there's a high chance that it's going to break out. So just by this simple analysis right over here, the first thing you were supposed to do at this zone is to look for a rejection, go in for your buys if it did not break this zone and if it rejected at this zone, right, with obviously your stop loss right below this. And when the market started coming into this zone, you are now expecting the market to break out, because I did say that if it comes around and starts playing around in this zone, we are going to expect a breakout. And the market just broke out and then went shot right down to the bottom. If we even go on a higher time frame, it was the absolutely crazy sell that we had on Nasdaq, right? Just dropped right from this zone throughout to the bottom, right? Now, with the help of the weekly analysis, it can never be difficult to actually navigate these markets during the week, right? You could have actually had two really good trades if you had caught the first buy after the rejection or the second sell after the breakout at the zone that I actually indicated for everyone, right? Now, the fundamentals this week and, the weeks that are to come actually going to be kicking in a lot, influencing most of the charts and how they're actually going to move, right? And you know that we can never start a weekly analysis without going to check out our investing.com to see what news we have for this current week, right? It's nothing too crazy over here, just one of those, but then they're actually going to influence the market real big because there are a lot of crazy things happening in the US right now. So you actually just have to stay up to date with news. You can see that only on Monday is the day we actually don't have news, and every other day is a 3-head news at these respected times right over here, right? I want to actually trade the PMI right over here and the GDP on Thursday. So Wednesday and Thursday are going to be really, crazy days for me because I actually want to capitalize on these movements. So if you're someone that actually, sits down to read news, you do understand that a lot of central banks have been buying gold lately and selling the dollar, right? So that obviously is influencing the gold buying momentum that it actually has, despite the little, drop that is had over the couple of days. And I did drop a setup in the free signal group right over there, which I was bullish on gold because I actually still very much believe that we are actually going to still remain bullish regardless of the fact that it has been dropping and showing signs of a retracement, right? All right, so having that said and done, right, when I did drop the gold setup, it was around about somewhere at this zone right over here, and you can see that it closed off the week with a lot of selling pressure. They still did, step into the market and kind of broke the little trend line right over here. So it's not really screaming very, very bullish on gold, but it is still very much bullish, as you can see with the overall trend right over here. So if we're going to be taking these positions, we're going to actually just risk less, right? Because the setup has actually broken out of this trend line. We do have a little bank zone at this zone, so it might actually just be rejected and then goes up to the top. And you should also just keep in mind that whenever you take a trade, there's actually going to be two possible outcomes of that very trade. So in case the market just goes below this zone, you have your little stop loss here, and if it just rejects here and then moves up to the top, you can actually just capitalize on that particular. So that's about it on gold. Let's just check out US30 right over here. We can see that it's almost the exact same setup. I haven't been trading US30 for this week because it did break the highs over here and we did capitalize on this little buy that we have. Let's just check out Nasdaq. You know that Nasdaq is my baby right over here, right? So it was really an impressive sell on the Nasdaq right over there, and this is the daily time frame. You know that we use the daily time frame for the overall bias, and to me it is still very much bullish. You can see that Nasdaq has been bullish, like it has just been going up, right? And then I am a very much believer of following the trend, and if the trend is very much bullish, I am also going to just be very much bullish. So we are not going to be biased though. The one thing about me is I'm never biased, right? In as much as I will be very much bullish if the market is showing me that the sellers are stepping into this market, breaking all the bullish setups, I'm going to step out of the trade and actually look for better entries or even join the selling pressure if it breaks the overall trend. So I personally like the point where Nasdaq is sitting right over here, and on Monday we actually just going to tell if the institutional money are going to actually just buy the Nasdaq in their latest file readings, or they'll actually let it break, right? So that being said, you already know that I am saying that if the Nasdaq rejects at this current zone where it is right over here and shows good buying momentum, right, we're actually going to just capitalize on this particular trade. And then now if it does not reject at this zone and breaks out, there's absolutely nothing holding the market at this except for this little bank zone that we have right over here. So we're saying that if it does break and close outside of the zone, we don't have any reason looking for further buying positions at that zone. We would actually just want the market to now come back to this particular zone right over here, and that is the second possibility, right? So where do we actually buy if if the market rejects over here, right? So 4-hour time frame is actually just still really large for us, and we don't want to go in too early to a trade that might actually just reverse on us. So you actually just have to wait for the market to show you really good price action. So far we can see that we have a little build up right over here. You can see that the most recent trend was a selling trend on the 1-hour time frame right over here. The retracement was a little, selling trend. You could consider it as that. And then you already know that if we have a trend, we can absolutely draw a trend line. Let me just do a rough little trend line right over here like this. So we are saying that we want to see the market playing around at this zone. Personally, I would buy the Nasdaq if the market comes and breaks out of this zone, right, instead of when it's still around about this range, because in this range there's a chance that it might just go up to the zone and gets rejected at this particular point, and then breaks out and goes to the bottom. But if it just comes back to the top, breaks out of these zones, and then I would probably enter my first positions right over there, and then that I'll actually now be waiting for the second breakout of this zone, and then that would probably be at the trend line. If it this breaks the trend line, then that's an absolutely crazy buy, because we'll just buy the break of the trend or wait for the retracement, because the market is never going to actually just move like this after it comes to this zone, breaks out and breaks out and breaks out. You've never seen any market that actually moves like that, right? So it's going to move up, go back down, move up, go down, move up, forming a little trend as it goes, if it actually just wants to do that. And then obviously if it fails to break out of this zone and plays around this zone, you want it to go back to retest this zone. If it breaks out like this, it will retest this zone, and then you take it up and then ride it to this next level right over there. But just like any other video of mine, nothing too complicated. If you did enjoy that video, don't forget to hit the like button, turn your post notifications, and subscribe to the channel. With that, it's been Tino, and I'll see you in the next video.